I think it's recording. It doesn't tell me anymore because when I do these like AI recordings, they take that beautiful moment where it says recording has now started. So welcome, everyone. First timers, this is a really great opportunity. VSG opens up a speaker series to the public where we get to bring in specialists and generalists to come and talk about startup supports in various topics and useful techniques. Today, we have Ajay, who is currently one of our mentor specialists at VSG and supports our teams directly. This is his second time doing a talk for us, and he also provides office hours to our teams. He has experience in pricing, business development, marketing, customer acquisition, product market fit, customer discovery. So he really understands how startups should approach interacting and understanding their customer. He's worked in defense, aerospace, manufacturing, software as a service, and clean tech. So he has a lot of experience in different verticals and different sectors of work. At the end of the day, he is a consultant that really knows how to advise and support early stage tech teams. And so this is his opportunity to wax poetic on his skills. This is his second talk. I'm not sure, Ajay, did you say it's going to be a continuation, or what are you going to tackle today?
It'll be topics that I didn't cover the last time and things that I've learned from speaking to many of you since I did my first talk.
Awesome. So yeah, I mean, I just want to once again thank you for being a part of our community. You are incredibly invaluable. This particular type of resource is super challenging for early stage teams to really tackle and understand. So having a specialist of this kind is so useful. So thank you. I'll let you take it away.
Thank you, RC, and it's great to meet everyone. So I've got a little screen presentation here that I'm going to share. Can you see that? Yeah, okay, great.
Yeah.
Perfect. All right. So what we're going to talk about today is part 2 of my talk from before. And for those of you who attended part 1, we're talking about revenue management. And revenue management, we talked a lot about pricing, and we talked about product market fit, 2 big areas we did last time. I'm going to cover a few other areas this time. So by way of introduction, and RC did an awesome job of introducing me, so I don't really have to say that much more. But I'll say this, that I'm an engineer by training. So everything I do, I look at it as a system level person. I'm a big believer in seeing the pieces work together to produce powerful outcomes. And this is why I'm so passionate about revenue operations, because it really requires system level thinking. Oh, by the way, please connect with me on LinkedIn if you haven't. And any way I can be of support to you, let me know. So here's what I would like to cover today, right? And, I'm a strong believer that tech founders wait too long to start thinking about scaling. And I'm going to try to change your mind about that today, right? So few things I would like to talk about. Why, as a tech founder, being in a early stage company you should think about scaling ahead of time, because you have many advantages to doing that today. We're going to talk about some practical steps to achieve what I call scale readiness. And that's going to be things that you can do today that I have learned from all my interactions with several of you over the past few months. And just like we did for the last talk, let's keep this interactive. Feel free to interrupt me and ask questions. RC, if you could manage the chat, you could also chime in if someone asks a question. This is not about going through this slide deck, but this is about really making this useful to you. And that's why I do this.
And before you just jump in, I
Sure.
wanted to mention that I put the library of previous Oceanside chats, and I linked your first chat specifically in case you guys weren't here for that one. You'll have it. And also AJ's LinkedIn is there now. Perfect.
All right. So the content I'm presenting today is based on working with several of you. I counted, I've had more detailed conversation around 8 companies so far. And this is lessons learned from those, and how I think that ties into scale readiness. So just to lay the context, scale readiness is a very broad topic. And we're going to highlight a few that I think are particularly common to most of you I spoke to. So there's a few ways to define the startup journey. And I'm sure you've seen charts like this everywhere, right? And so most of them follow this kind of pre-staged, early stage, growth stage, happy ending as an exit stage. And most of you are in this stage 3 or before, right? So you have developed an MVP, or maybe you're close to developing one. You might also be in the process of establishing a product market fit. Now, the right side is where the excitement happens. That's the scaling. You'll be expanding your team, building revenues, growing your company profitably. So the problem is most startups are not really thinking about what the requirements are when you're in that growth stage, right? And they're not being proactive. They're getting what they can now, but they're not being smart about what scale looks like. And no wonder that only 10% of companies make it from that left side to the right side, right? And that's just the harsh reality of the market and not being smart about it. So just to set the record for what we're talking about as scaling, right? So when you scale a business, you're obviously scale a lot of things. You scale revenues, number of customers, number of people on your team, you're adding infrastructure, your costs go up too. But what we are talking about today is not growth scaling. It's not about adding more customers. We're really talking about something more specific. It's talking about this disproportionate growth in your profits that exceed the growth in your expenses. So that's what we consider to be successful scaling as a concept. By the way, any questions about any of this, please ask. Most of you know this is basic stuff, but I just want to cover it before we jump into the meat of the thing. So this journey that the startup takes from startup to scale up, it requires getting past several hurdles. And this chart here outlines them. I won't go into the details, but essentially a startup has a scale up has an established formula and a structure in place to grow their business across all these different dimensions of business model, funding, market strategy. It's really about doing what you're doing in a highly organized and repeatable way that turns you into that scale up. So there's a few things that you need to think about before you can consider yourself to be a scale up. And I've listed a few of these. Now, the first one, product market fit, we talked a lot about it at my first talk. And I believe there's also some excellent VSG Oceanside chats that address it as well. So I won't go into that now, but I would like to talk a little bit about go-to-market strategy, which I'm a huge believer in getting right. This is a must-have, right? And thinking about it not just from a customer acquisition standpoint, but also as a business model. Then getting the right people in the right seats. Think of hiring athletes who play a variety of roles, share your values. That's going to be really critical when you scale up. And of course, nothing works without a sound operational strategy and good financial backing. You can't scale up without those. So given this checklist and given this framework, I'd like to dive into a few areas that I think are found common to within my conversations that I have here. So these are like 5 areas that I'd like to chat about today, right? So first is go-to-market strategy. We'll talk a little about the ideal customer profile, value prop, hiring people, lead gen comes up a lot, and also what you focus on. So go-to-market strategy, right? So this go-to-market strategy is one of the most challenging areas, I think, because it really requires an intimate understanding about your target market and ecosystem. And we know that no two go-to-market strategies are the same. So you can't like copy someone else's go-to-market strategy. It just won't give you results. It's never too early to start planning for a go-to-market strategy. This is one area that I find even companies that have been around for 10 plus years or haven't done right earlier on. And missteps you make with having a sound go-to-market strategy actually impact you for years to come, costs a lot of wasted resources and energy spent going after the wrong things. And so this is actually a reason for why I'm employed by companies is they need help to go back and figure out who they're going after in the first place, right? And so this is where I just want you to think about a little bit about who you're going after and be very clear of how you're approaching that market. I'm going to jump in an example, right, which I think will help kind of clarify this. So Matt King is on this call, and we're going to talk about simplified trade. So for those of you who don't know, simplified trade makes retail execution software, and it gives stores store level visibility across the entire supply chain, right? And this has the potential to be a game changer. It's a tremendous product that really brings easy insight to a vast variety of stakeholders. So Matt has been assessing his product market fit, and when we spoke, there's like 3 areas that they're looking at, right? The retailers, brokers, and manufacturers, right? And so just to say that each of these has different challenges to be vetted out. So if he sells this solution to retailers, right, and he's really looking for smaller retailers, they're spread out geographically, call it mom and pop, smaller stores, it means there's a large number of decision makers, and he's going to have to win one deal at a time. Versus compared to brokers, there's fewer brokers there, right? They're easier to get to, but that also means a more limited market, and that's going to change how he goes to them, what channels he uses, how his pricing is laid out, looking at what kind of options they have, how he positions his value prop based on what they're looking for. And the one that is most willing to pay are manufacturers, people who sell into retail. There's a very large number of manufacturers there. But the one thing that he discovered early on is that retailers might always want to share that info to manufacturers. So there may be some conflicts of interest that need to be resolved early on. And all these will impact his go-to-market strategy. So I'm just going to ask Matt, since he's also here, any thoughts, Matt, about this and how your thinking has been?
Yeah. And first off, thanks for taking your time. I know I've thanked you before, but just like someone who's a professional, I know you've got an extremely busy life, to be taking your time to help us entrepreneurs out and trying to get our business going. It is very admirable. So anyways, thank you for that. Yeah, so it's like this is a definite struggle that I'm having and that I'm focusing on. And it's like the broker area, I can definitely get deals done faster, but still the deal cycle is long and the return is a lot lower. So like I can get a deal done with a broker, and that could be like a $10,000, $20,000 deal, sometimes even less than that. Whereas a retailer or a manufacturer, deals could be 5, 10x times that of brokers. But there's so many more people that are involved in the conversation that it's a struggle. It's a struggle oftentimes to get things done. And so I'm almost like, do I focus on the quick hits, to self-fund and show more validation? Or, do I try to go after these bigger opportunities? And as a startup, sometimes it's harder to get in front of the, all the right decision makers. But, like if I land one of these, like for example, I'm talking with affiliated, like we're talking a deal that could be $400,000 or $500,000, but that's still a moonshot. It's not like, a done deal. So
yeah. No, this is actually really important for the others to hear as well, because what Matt is going through is hard work, but it's super important that he's doing this now versus just taking whoever he gets today and deciding to scale the business based on that. He's thinking about what market he's going for, what channel is he looking at, who is the competition within those channels, what the price dynamics are within those particular customer groups, and this it's going to pay off in the long run for Matt, because he has already considered these, and he can answer to investors, he can answer to customers, he can focus his effort on the in the right areas that'll truly grow his business. So I'll just anyone else has any thoughts about this? Okay, so I'm gonna go back to a slide that I had from my last talk, right? This is that customer journey, and why this product market fit and go-to-market strategy is so important is because the customer journey is different depending on who you're going for. So these are all the different steps that customers take to learn about your product, to value your product, to purchase your product, to stay your customers versus move over to the competition, to give you more business, to talk about your product to those around them. And this will be different depending on which market segment you're going for. So oftentimes, the startup journey is take who you can get now, worry about this later. But this is the stuff that bites you, is not understanding these steps and not having a clear understanding of how these fit together. Okay, so
AJ, before you
go
move
ahead.
on, could you
Yeah.
maybe help me to understand in this kind of transition, right, from awareness to advocacy and evangelism, like where do you see kind of execution typically go bad in the early stages, right? Is it kind of evenly distributed and there's no real area in general where it goes off the rails? Or in your experience, do you feel like startup founders should hear, like, you know, these are the areas where traditionally I find myself advising?
Sure, yeah. So earlier stage, you have fewer opportunities for expansion and advocacy. So you're definitely leaning towards the top part of this funnel here. One of the challenges is not understanding what your sales cycle is and not talking to the right people. So what I find is most people think that, you know, the sale starts somewhere in the evaluation phase, meaning they're waiting for customers to compare their offering to a competitor offering, and that's just way too late. By the time you are, if you are the first time you're talking to a customer is when they've already looked at your competitors, that's your chances of winning that sale, unless you drop prices or something like that, are going to be low. So one big area is not thinking about the journey as a journey, but just thinking about this very transactionally, as in, all right, who do I have to beat? Who's my competition? I'm just going to go straight at the competition without actually thinking about the customer themselves. So that would be one huge area. And RC, you and I chatted a little bit over email about pricing. You know, everyone talks so much about pricing, like, hey, I have to get my pricing right. But when you really think about this, right? So yeah, pricing, sure, that definitely is an evaluation criteria, but pricing is based on perceived value. And until you sell a perceived value in that discovery and interest stage, you're not going to be able to capitalize on optimizing pricing. You're going to be taking whatever the market gives you at that point.
Got it. Thank you.
Perfect. Yeah. So also thinking a little bit about how this fits in, right? So go to market. And I know the term go to market is overused a lot, but I really like this way of looking at go to market in steps. You know, like you start off with a ICP, and ICP is ideal customer profile. I don't know how many of you have really thought through this, and more than a paper exercise, but really thought through who you're selling to and how intimately you know that ICP and the persona. of the person that you're targeting. And so it starts with that, and then you do your lead generation based on that ICP, right? And oftentimes if you don't have that link, you're just taking whatever lead that comes in, right? Then it's converting the leads to paying customers. This has a lot to do with your pricing strategy. This has a lot to do with your with just value selling between those two. It may have to do with the bandwidth that you have to take leads and to convert them. Maybe how your product features match market demand. So there's a lot that goes on in that step too. That's one area that I think that often startups struggle with, even though everyone says, "Hey, bring me a lead, I'll convert it." It's usually not the case, I find. And then from there is to actually turn them into successful customers. This can be a little challenging early on, especially when you're still working with an MVP, that you don't meet all your customers' needs right away. And so there's that side of still working on a high touch motion to get to customer success, and then ultimately, upsell them where possible, and stop them from leaving. Have them be advocates of your product to others around. So this is the one thing I should say here, like super important to have that value proposition and ICP really nailed down, because otherwise this entire journey is going in the wrong direction and you don't have consistency. Good scale ups have this nailed down, and they can do this repeatedly. They have this across different markets, and that I would say is one big difference between successful scale-ups and those who haven't got there yet.
AJ, I have a question. So what about startups whose technology or product is like addressing kind of a large issue in huge institutions, and so their ICP is not necessarily narrowed down, and because they're just literally trying to get in the front into a meeting with anybody, they're casting this crazy wide net? Do you think that that's a smart way to do it, or do you think it's important to like really nail down like an initial target customer? Is a person who's at that stage still really in the discovery phase of their development? Like I sometimes feel like even teams here at the garage have not narrowed down their ICP or don't have that criteria detailed. And I don't know when that is like, you got to do it.
No, that's a great question. And just because you can't be a chooser before you really understand what your market is. But I will say this, that even if you may be working on multiple ICPs when you start off, just because you haven't nailed it down, this is more about understanding the ICP than even picking one right away, right? I mean, you need to know your customer. You need to know who you're selling to, what the buying cycle is, how the decision makers look at your offering versus their competitive offerings or alternatives that they look at. So I think what doesn't work is going in unprepared or going in with a very broad strategy, and you just hope that something that you either a feature or a selling point that you have will somehow stick. And that approach doesn't work as well. So I would rather like to see startups think about this as, okay, for example, you look at Matt, and Matt has a few different options that he can look at, right? But then he can pick one or two, and he could see those through before he jumps into just doing everything all at once. So this is more about being specific than it is about having the right answer right away, because I think you're exactly right. You don't go in knowing all this stuff. This is where the hard work goes in. There's some level of testing there. There's some level of validating your assumptions and going back sometime, taking a couple of steps back to move forward. But that's part of the journey. My point here is more about having a framework for this.
Thank you.
Sure. Anyone else have any questions or anything to add about this? All right. Now, this comes up a lot. You know, you're a small team. Most of you are small teams. And at some part of your growth, you're going to think about hiring people. And your bandwidth is limited. Many of you may not be doing this as even a full-time gig. And, you know, you're going to need to bring in more people. And, you know, this requires a lot of honesty as to what you're good at and what you're not, right? I mean, most founders kind of start off because they can wear multiple hats. They can do a lot of things. They may not do it best, but they can get by, right? And at some point you come to that realization to say, you know what, there's going to be someone else from the outside who I can bring in who can do this better than I can. So this does require a lot of self-awareness for founders and leaders, and not just about themselves, but also for their team members as well. You might have team members who are doing the best they can and they're just taking on a lot of tasks. But just because someone is taking on a task doesn't mean that they're really the best people there for that. So so that's one to really think about, and also the costs that are involved in hiring someone new to your team. They go well beyond the year one costs, right? There's also longer term costs of now you're investing in them, and that means that you need to be smart about your early hires. Early hires don't always work out, but I do think that you need to have some thought that goes into who you bring in. Any thoughts about hiring people?
I know
Yeah.
for me personally, this is Matt, Simplified Trade. Like I just brought someone on part-time, and I mean, it's honestly a struggle. It's like it's a startup. You've got so many different needs, and how to manage the money coming in versus the money going out. I've seen many a startup get those maybe afloat and doing fine, and then all of a sudden they got funding, and then they're bankrupt in 6 months.
Yeah.
They start running their business differently.
What role did you hire for, man?
I hired for someone that does some programming and statistical analysis, and she seemed to be highly qualified. Nice, we got along. So yeah, so she's come on board part-time, and one of the things I'm struggling with is great value. I love the person, but maybe I should have focused more on someone who's in sales, and I'm debating on whether I should outsource that sales option. That's, anyways, roundabout way, like outsource, do you hire the person on? I don't know, it's a struggle.
That's a fantastic lead, and you must have seen my slides, right? Because this is what I get asked for most often, right? Most founders are good at what they do. They may be product experts or operations experts. They at some point want to bring in someone to do sales, right? And very common. Now, I'm going to share an example, but when you think about sales, right, there's a lot that goes into sales. And I just broke down here different sales related tasks. And what you'll find is, as a startup founder, you're doing some of these already. Maybe you're doing all of them, right? But now you really have to think about how well you're doing these tasks. And even when you're hiring salespeople, they have different skill sets, and you need to bring in the right person. Someone who is good at cold calling and setting appointments may not be good at negotiating contracts, or someone who's good at retaining customers and keeping those customer relationships may not necessarily be good at bringing in new leads and working on new logos. So you really have to think through a little bit about where your gaps are. So this is an example from Laura at StyleBot, and she was okay with me sharing this, but she was talking about bringing in a new salesperson, right? And so we broke this down and we really looked at what her lead gen and conversion process was. And what we looked at, what we found was where she really needs help in is in that first box, which is researching leads. She's got a way of taking lead information, names, contact, phone numbers, email addresses, and convert that into campaigns. And she's got some campaigns that are very successful. So what started off as I want to hire a salesperson really went to, you know what, I need someone to research leads and give me leads, credible people within her target market, where she could be successful. So this is going to mean that she's going to obviously save money doing that versus hiring a salesperson, compensate them very differently than you would a salesperson. Really opens up where she can get this information from very differently than if she just went for, hey, I need a salesperson. Any thoughts about this?
I have, so, obviously I know all of these teams and I love them very much. I'm so happy that you had a chance to talk with Laura. I do think that the kind of knee jerk, especially with, technical founders, is to want to put down the sales bag as quickly as possible, right? Oh my gosh, I hate it so much. I hate talking. The whole process is very uncomfortable for a lot of non-sales or non-business style people. However, I wonder, in your experience, how much better is it to invest your money in maybe a coach, like a sales coach, becoming better yourself? Because I hear so often, especially from successful founders, that really removing yourself from the sales process too early, or just not being connected to your customer, is kind of like almost one of the nails in the coffin, right? Because really that's where you should be at the earliest stage of your company, is in there on the ground with the customers, really understanding them and having conversations so that you can then continuously manipulate your product to make sure that it's growing as your relationships grow, right? And if you pull yourself out of that too early, you can miss that opportunity. But I don't hear enough advice to founders to get a sales coach, hire somebody to come help you understand and get better at sales yourself. So what do you think?
Yeah. No, that's a great question. And, sales coaching is a whole business in itself. And there's a lot of people trying to sell you coaching. But I think it's coaching. Certainly there's skills that you can learn about, talking to customers and how to do demonstrate value and all those things, and those have a lot of merit. But I think before you hire a coach, you really need to understand this part, which is, what's your sales process? Where do you really need help? And then if there's coaching, use coaching for that. Unless it is a massive need, I'm a strong believer in getting help in the areas that you need it versus just some overall, someone's going to, teach me to be a better seller. Sales is less about style, more than it is about consistency and having a process that's repeatable. So I think it can help, but I wouldn't call that the first thing you should look for as a sales coach. I think you should look for example, there's appointment setting services. Again, I don't recommend appointment setting services too early on, because again, that takes away your ability to get out in the field and see what's actually resonating with people to even have a first call with you. But that whole lead gen is an outsourced area, very different. At some point when you're larger, you could use people to do demos and create proposals, but I wouldn't recommend that early on at all. So so I guess to answer your question, RC, I'm not a huge fan of just bringing in a overall sales coach that is gonna coach you to be a better salesperson. I would rather see people think about how they you know do a self-assessment before they bring in outside help.
Got it. Thank you.
Yeah. Any other thoughts? By the way, I'm curious, have any of you hired a sales coach or brought in someone to help them sell?
This is Matt again.
Yeah.
To answer that, I have looked into a sales service or a sales training thing to see if I could make myself better at the at kind of like the cold calling, emailing part of this whole thing, because in my past experience, and I love how you broke this down into these segments. Like my thing was all about account management, like, and I don't want to sound vain or anything, but like I used to think that I was a baller. You know, like I dealt with hundreds of millions of dollars, and you have big companies behind you, and you just feel like the man. Big companies want to talk to you, and vice versa. And then you go to this small thing, and now it's not so much about account management, but it's about getting those appointments in the first place and driving that interest when people don't know you from Adam.
Right.
And that's like where I'm struggling.
Yeah.
And I agreed with you, RC, about, like I don't want to be out of the sales process as much as I don't like this cold initial part. But I think that's more about, like, I want to have the meetings, but getting those meetings, I'd love to give to somebody else. I don't know.
Yeah, no, fair point. Hey, Andre had a question.
Yeah, hi guys. Andre Chabanov here. Great to meet you, and thank you for doing this this conference. Yeah, I actually just had a comment as far as onboarding a salesperson. So I actually used to run business development and partnerships at iTrust Capital at some point, then transitioned to product and engineering, and then ran those teams. But I think having a well-qualified salesperson who knows the market, who knows your product, and who has the network of people who might be interested in is worth its weight in gold. Because I think, but what's important is not to allow that person just to take lead and just bring you the business. So what we do with our co-founders is that we're still involved in any sales call or any lead call, and we make sure that we understand the needs of the potential client, regardless. I mean, whether that lead was brought on by the sales team or by someone else on the team, it's, as far as being involved, it's just a great learning experience and market discovery as far as what the client needs.
So you're bringing someone to bring you the leads, right? That's what you're doing.
Yeah, the guy brings leads and also adds expertise in the areas that we might be lacking.
Perfect.
And as far as someone to champion the sale is always a
great, yeah,
good way to go, because I also come from an engineering background.
Sure. That's good, good insight. All right, so, and just to, Andre knows this because he's worked for a larger company, but I just want to show you what lead gen looks like, right? When you look at it at scale. And you're not doing all these things. Most of you are not doing all these things today, right? But lead generation is doing a lot of things together, right? It's not just about bringing in new logos. There's not one thing that you do. You have to have a good marketing motion. It's usually, this is typical. This is from one of my SaaS clients, right? There's outbound email, there's paid search, there's web social. Then there's a BDR motion where there's phone calls and emails that go out. There's channel outreach that happens. There's partnerships within the ecosystem. Many companies have referral programs where people get comp for bringing in leads. So think of what you're doing now as being like you're working on one or two of these today, but when you scale up, you're going to have to do a lot of things together to bring in leads to sales. So this is I'm sharing this more as a framework, so you can see what's important down the line. All right, and kind of one of the last things I wanted to chat about is metrics, and everyone talks about metrics, and there's these ratios that they talk about. You have to monitor, and just kind of stepping back, I look at it and say, okay, so if you like, what should startups be thinking about when they think about scale, right? So these are just your normal metrics. You have financial metrics, operational metric, customer metrics. And I was recently asked, if there was one metric you could pick from all of them, which one could it be? And it's clearly fictitious questions. But when I think about startups, right, the one that really comes to mind is this long-term value or customer lifetime value over the customer acquisition cost, this LTV over CAC ratio, right? And I'll talk a little bit about what that is, but this is really a measure of how well you're scaling, right? So this is the value that your customers bring in versus your cost of acquiring those customers, right? And the startups actually, once you go, if you go from a ratio of 2 to 3, you can go by 300%. That's not 300x, it's 300% when you go from ratio of 2 to 3. And if you're a ratio over 5, you're doing really well. So this LTV over CAC ratio, this is one to look for. Go ahead.
Yeah, here's a question, having just lived through this, especially in the SaaS. Yeah. So CAC is always relatively easier to figure out.
Sure.
LTV, especially if you're an early stage startup, less challenging because you just have no idea what your churn's going to be until you start losing customers. And even then, it could be very specific as opposed to something general for your firm. Maybe you could address kind of how that works about it.
You're totally right, Dave. I think that's an excellent point that I was going to make. It's this is not one that you would have enough data today to capture accurately. And the reason for why I'm sharing this, right, really is to look at this as a framework. So think of this as this is going to be your test question when you're scaling up. And it's helpful to know that before you're there, right? So this is more a frame of thinking, more so than what you can calculate today. Not going to go into the accounting details for how you calculate this, but what you're going to have to do to get a good LTV and to CAC ratio, right? You're going to have to think about things like customer retention, higher profit margins, obviously volume growth, robust pricing models. All that's going to affect your LTV. And as Dave mentioned, it's going to take some time to get enough data to really understand things like churn, which you don't have today. The other side of this is, I think, more important is how efficiently you get your customers, and you want to set yourself up for an efficient growth engine. Think about partnerships early on. Who else do you have in your ecosystem that you can leverage? And so you're paying less for each customer that you bring in. Really important is where your customers are coming from, and just have some attribution in mind. Meaning, if I do X, I'm going to, get so many customers. I mean, think of ratios of how many leads you need to bring in to convert them, or how many leads you need to bring in to convert them to opportunities, and how many opportunities you need to have to convert those into close one business, and how much of that do you need to have a long-term funnel. So those kind of it's more the way of thinking. And then the other part about obviously costs of acquiring customers is how much you pay your salespeople. So my point in sharing this, which is not a metric that I would ask startups to start measuring, but this is my thinking, which I started off with prepare yourself for this type of evaluation that's going to happen further down. Right now, like the things you do to impact this ratio actually start today. You're already making decisions that are going to impact your cost of bringing customers, and so that was more my my approach to this. So, anyways, I'll did that answer your question, Dave?
Absolutely.
Yeah.
No, it's a great way to look at it once you can figure it out. I agree with you, again, having just lived through this, that churn equals valuation.
Right. Yeah. Exactly. All right, and I'm going to turn it over. So I thought you should have some takeaways after this call. I'm to just leave these here. I won't read them all out, but I wanted to see if any of you had any questions or anything to add to what we've talked about.
I know for me, just looking at these right here, one thing that kind of like stood out for me that I think I need to take a little bit of a closer look at is number 4. I don't know if it's lead generation or just sales in general. I like how you segmented it. It's not necessarily, sales isn't necessarily just one person. There are different people that are good at different things. And I think that was a great point, and really locking in at what's your area of biggest need, whether it be research, whether it be the cold calls, the meeting setting, or the actual closing of the deals, account management type stuff.
Sure.
Yeah. So anyways, I thought that really struck me.
Yeah. Great point. Yeah, I figured that's going to be a common one for most people.
I think what's great about this breakdown is that it is a breakdown, right? Because I think like oftentimes the conversation is just about sales, and it's like this big kind of like fog of requirements and skills and things and time and resources and so, when it gets broken down in this way, and I think that that's kind of like your approach from your first talk to this talk is really helping founders kind of distill and identify where in this kind of breakdown, right? Whether it's a process breakdown, an engagement breakdown, or even just like when you're approaching sales broken down, where is it? Like, where are you struggling, right? So that you can effectively focus and have the right types of conversations or make better decisions because you're being so much more intentional in solving that problem. So for instance, like just having conversations with teams all the time, every Friday during Founder Circle, I try very hard to do exactly this because sometimes the conversations just become so big and nebulous, and you can kind of hear the through points, but at the end of the day, are we even really addressing issues? And so I just appreciate that you have it broken down in this way. I think it's a great way for teams to start evaluating themselves. Number 2, I think comes up often. And I don't think we ever talk about number 1, right? Like, and I think this is true for early stage teams in general. Are you creating the building blocks or the foundations for when you do actually get to a point where you're doing completely different, right? And that even goes back to hiring, like hiring practices, company culture, things that are kind of overlooked because you're just so busy doing the work that you're not thinking about how am I capturing this information, and is it actually what we want to be doing? Are we building a foundation? What's our structure? So I feel like number 1 hardly ever gets discussed, but 2 and 3 often get discussed. And I think founders do a pretty good job of supporting each other when it comes to lead generation. And I think the chat's a perfect indicator of that. Like immediately a founder put in Apollo as a link because, you know, everyone struggles with this. Yeah, and then when it comes to data collection, I don't know, I feel like no one is ever collecting and analyzing enough data.
Yeah, you won't have all the data to begin with when you're starting off. So number 5, I think, is, you know, track what you can track right now, right? But just hold yourself accountable to it. I mean, the metrics are a lot simpler when you're a startup. They do get more complicated, and definitely get very complicated once you have investors looking over your shoulder. But
That's it, AJ. It's the accountability piece. You know, founders are so autonomous. There's no oversight, there's no accountability. And when you aren't reporting, you don't think about the data that much because you don't have to account for what it is that you're doing. I feel like that's so important for founders to think, like, if what you are doing right now needed to be reported to somebody superior to you, right? Somebody who's going to make or break your company. Like, could you do that effectively right now?
Correct. Yeah.
I'll throw out there. Sorry, I'm Perry. I apologize for being late. We were it's the biggest ed tech conference of the year is right now in San Diego. So it's been crazy. But you know, we have a mentor who put it in a really interesting way. And I don't know if I'm missing the if I'm coming in from a different angle, but with the whole scaling up concept, he said that, like, he hears a lot of companies, and as he said this, I was like, shoot, that's us. But like a lot of companies who say, you know, hey, you're going to raise money, what is it for? And the answer is like, oh, it's sales and marketing, or it's, you know, the product, or, you know, whatever it is. But it's these like kind of like broad categories. And he said that a better way to approach it is, you know, for us, we're in the college admissions counseling space and trying to level the playing field and access to guidance. But for us, it would be like, hey, we did a webinar the other day with 35 people. 10 people signed up for a phone call. 8 people who signed up for the phone call signed up for a call. With that kind of a close rate, we know that if we raise this amount of money, we could get to this many people, which would get to that many calls, which would get to that many signups. And you're like so much more knowledgeable about your own numbers. And I just sat there and I was like, wow, that's like such an interesting way of thinking about how to talk to investors. Cause like, and of course I had this like insane, like my heart sank because I was like, oh wow, like I've had a talk with 100 investors and every time I'm like sales and marketing, like this like broad thing. So anyway, I thought that was really helpful and it was a cool way of like thinking about the scale up concept.
No, it's actually a very good point. I'm actually going to go back to this slide that actually addresses. So this is a funnel, like when you look at it, right? There's so many prospects that you put into the funnel, and then there, you know, so many demos that you do from there, and so many proposals that come out of that, and so many contracts that come out of that, and then so many close after that. So understanding these ratios. Now, this does take time to get those numbers right, to see how many leads you need to have in the funnel to deliver a certain ARR. That takes time to figure out, but you're exactly right. These are the kind of ratios that investors want to hear.
It's cracking the code, honestly. It's a discussion that I've had with both like existing portfolio companies and potential investees is that, you know, you tell me if I put X dollars in the front end, it's going to come out the back end, and how predictable is that? And again, that really is cracking the code. Once you can explain it and demonstrate it, and you don't have to have complete history, but to be able to say, this is each step, and these are the ratios that we're looking at, and this is why we believe that dollar in equals dollar out, you're going to be a lot more likely to have somebody sign up.
Yeah. All right.
Are we?
Yeah, there's no other questions. Yeah, that was it. Here's how you can reach me. As yeah, please feel free to reach out to me on LinkedIn, as many of you have. And yeah, any way I can help you out, let me know.
Yeah, and for those of you who are local, if and when we do get AJ here in person, which he has come into the garage before to meet the Team Strength Founder Circle. And I love that idea. Pre-pandemic, we used to do in-person Oceanside chats. The reason we've shifted them virtually is just because they're so much more effective. You get a broader audience. You can bring in speakers that aren't local. But that doesn't mean that I don't have it in mind to do in-person stuff, especially because VSG is an in-person incubator. And so if you guys have an appetite for that, the next time you have a chat, AJ, maybe we'll do it virtual and see who shows up.
You mean in person?
Yeah.
Okay, perfect. Yeah.
Yeah.
Happy to.
For the rest of you on the chat, and then, anyone who might watch this video, I just wanted to mention that we are kicking off our national virtual space cohort, which is basically the same exact resources we provide for teams virtually for technologies that are space applicable. And we have some really great partnerships. You can find that information on our website. I just want to make sure that I'm constantly talking about it because it's new. And so we're building the early stages of that community now. And I'm really looking forward to having a great initial cohort for that. So also, if you know any teams who have, products that can be dual use case in space, I think that the ethos of it is that we want to support people in thinking about what the markets and business opportunities are in space. And so don't sell your product short. If it can be useful in space, you might be a good fit for the space cohort. And then just another thank you to AJ. AJ, you've been such a great addition to our squad, our VSG squad. And so we look forward to having you do this again.
Yeah, very happy to help. And yeah, great to meet everyone.
Bye, everyone. Enjoy the rest of your Wednesday.
Thank you.
Bye-bye.
Bye.
Thanks, guys.